Ajay, he writes in and he asks, what is the reason that most ETFs and index funds are in the large cap space only, and why don't we have them in the mid or small cap space?
Yeah, there's some small beginning. Some fund companies are getting started with their small cap and mid cap index ETFs and index funds as well. But I remember, long time ago, about 15 years ago, Benchmark launched, the erstwhile, Benchmark, which now eventually got transformed into Reliance Mutual, uh, now Reliance Nippon. They started a BSE 500 index. And BSE 500 index was a very difficult index because replicating that index was very difficult. There used to be about 50 stocks in which if the fund got about 15 to 20 crore rupees of incremental money in a month, the fund was unable to buy those stocks. So the absence of liquidity in the underlying stocks, Nifty and Sensex is easy to do because these top 50 companies or top 30 companies, the FIIs buy it, there is enough liquidity. If the funds are getting 50 crore, 100 crore to 500 crore on a daily basis, they can still deploy it. It is very difficult to deploy that kind of money in the small cap and the mid cap index because so far the mid cap and the small cap index, they had absolutely no connection with the reality, and even now I don't think they have, because they are just supposed to be a barometer. How are the index doing? How are these stocks doing in general? That is just to get a sense of that. But they are not designed in a manner that one should be able to invest in those index in exactly the same proportion. And maybe for 5 crore, 10 crore, 25 crore, it can be done, but without much of an impact cost, because that is another significant thing. When you go to buy a small company stock in large quantity, that action of buying in large quantity of a small stock which will have low liquidity itself will drive up the index. That will have an impact cost which could be quite substantial, and it could be at the time of buying and it could be at the time of selling as well. So we have to see, it is a chicken and egg story. Till we have more money in such index funds, or those index funds get created, there won't be liquidity. Also, I feel that Indian small cap and mid cap universe, many companies where promoters have a very significant holding, and there is just not enough liquidity in the market, or there is not enough supply in the market. Even if price goes up, there are not too many sellers. I know of companies which are 5,000 crore capitalization or 7,000 crore capitalization, but it is extremely difficult to buy stocks worth a crore of rupees every day. Their daily liquidity can, so small investors might have an advantage that they can put their 1 lakh, 5 lakh, 50,000 rupees on a daily basis in such stocks. But for an index fund, for a meaningful amount of money, that will not be, it's difficult to replicate. So my sense is that such ETFs will be very hard to run. Open-end small cap index funds might still be possible, but beyond a certain scale, unless the underlying liquidity actually rises or grows substantially, it will not be possible. And let us see, there is a modest beginning with the launch of some of these small cap index funds. Let's see how it shapes up.